Ladies and gentlemen, good morning. Thanks to the gentleman who made us do all these exercises. At the beginning of a boring topic, but I hope it's thoughtful. That's all that I can bring to the table. And thanks very much, Hoshi, for this generous introduction and getting me over from Calcutta on a holiday for this one day to my home city, Bangalore. It's always lovely to be in Bangalore, and believe me, the pollution levels show. Unfortunately, I'm not too well because of that, but we'll still try and see what best we can do. So the topic of the day today, I was told, is the magical Indian economy. Some call it the booming Indian economy, and a CFO's perspective. I could have taken it in multiple directions, as some of my writings would show, but I decided to stick to the script, which is a CFO's perspective. Many years ago, for a very long period of time, I was on the other side of the table, so I know exactly what it means. Things are changing, and I hope it changes for the better. When talking of perspectives, there are three personal experiences I'd like to share so that you understand where this perspective is coming from. It's surely helped shape my perspective as a CFO and as a human being later on in life. And that's what you will see through the rest of the presentation, so that is important. The first one is when I was a 5-year-old, my grandfather used to take me on walks and shower me with proverbs of all kinds. Looking back today, I know that each and one of those proverbs were right. The one which is relevant for this topic, and of course generally speaking too, is the one from Aristotle. The more you know, the more you don't know what you know. It's sort of, that's the problem. In a world of instant gratification and news today, we all tend to look at one small element, look up Google and Wikipedia, and that's knowledge. Actually, that is the problem, and people in decision-making capacities need to know what you don't know. Only then will the humility come. The second one, I've not got a slide on it because it's from a business icon who I worked with, and he's a very private person, so he doesn't want his name anywhere, so I'm not putting up a slide. But I'll tell you what he told me. When he was hiring me as a CFO way back in 1995, I was all of 35 at that time. He said, Mr. Roy, I will drive the car very fast, being the leader of the organization. But I want a CFO. But I can drive fast only if I know the brakes are working fine. And that is the role I expect the CFO to play. Challenge me, challenge my business managers, bring different perspectives. Don't get swayed away with the crowd. It's a learning which stayed with me for life. Not many business leaders are like this, unfortunately. I was talking to a gentleman this morning here. He seems to have a boss who is similar. You're very lucky. But as a community, as a CFO's community, this is our primary role, to question, look at perspectives, and bring a balanced perspective to the decision making. The third one, at the age of 39, I took a 1-year break and went to London Business School for the Sloan Fellowship to do a master's program in management. I was already at that time the finance director for Asia Pacific of a large company, Eveready. And everybody in the room were equally or more qualified. The age bracket of the program was about 38 to 50. So people had achieved various things in life at that time. And we all came in saying we know everything. Of course, fine. And the first slide which was put up by our dean, the first day one, was this slide, which is really profound, which is basically saying that life is lived forward but understood backwards. the level of humility which this brings in once this sinks in is the fact that once we are going through life, we hardly know what we are doing. And if we have somebody who has had the wisdom to interpret what's happening, that can be an unbeatable combination. So that's the reason Chandragupta Maurya had Chanakya, huge age difference, and wisdom, of course. I mean, not only age difference, wisdom. Xingtsang had Confucius, and so on and so forth. This was another life-turning thing which was given on day one of this loan program to us. Okay, so let's get to the crystal balls. The only thing I always say, predicting the future is a fool's game. You hear that all the time on CNBC or anywhere else, people trying to predict stock prices, this, that, and the other. It's a fool's game. The only thing we know about the future is we do not know. And I had occasion to meet Scott McNealy in year 2000. It's the Sun Microsystems founder. For those of you, he's sort of retired now. So he had told me something very profound at that time. He said, Mr. Roy, planning to the nth degree of freedom, which is what our community does, is no longer a sustainable advantage. It's necessary. You need a framework, but it's no longer a sustainable advantage. It's not going to be a sustainable advantage. What will be a sustainable advantage is adaptability and resilience to change. Because the world is moving so fast, it's going to move so fast, that you have to know how to adapt and be resilient. Life-changing words for me at the age of 39, 40 at that time. And when I came back to India, that's something which I always remembered. And of course, we have seen in the last 20 years how the world has changed. Hoshi mentioned about COVID. When COVID hit us, none of us knew what to do. There were no precedences. None of us knew what to do. I advised the chairman of a company. He called me up and said, "Kya karna hai?" We had 25 global subsidiaries. I said, I have no blooming idea. And the buck stops with me because I'm advising the chairman, or who else? And he's asking me, and I don't know. Nobody knows. And yet we adapted, right? All of us adapted. So adaptability, being quick, but within a framework, is what matters to everybody, definitely to CFOs as well. All right. So I'll start off now with, given this background, let me do a quick poll before that. How many in the group, just a show of hands, think that the Indian economy is doing very well, is doing well, or not doing so well? Very well? Yeah, a fair majority, yes. That seems fair. Doing well? Practically everyone. And not doing well will hardly be any. Great. It's a good data point to have. This is what, so I'll now go through the data point. They're all from the public domain. So like I said, all you'll get from me is my views on it and my perspective on it. So all in the public domain at various points I've taken from there. So the first one, of course, based on which all of us feel that the economy is doing very well, the government surely thinks about it, the media thinks about it, is essentially the GDP number. 7.8, that should be 6. Okay. I think it's 6.8, but I could be wrong. No, sorry, it is 7.8. 7.8 for this quarter, against the entire world reeling at about 1.2 to 2%, some companies at 4 and 5. So it's a matter of fact that we are the largest, fastest growing economy in the world. Any forecast you can take, but roughly it says the average for this year will be about 6.5 to 6.6, and we'll maintain that for the next few years. In terms of the gross domestic product, we are roughly at about, $3 trillion now. We'll go to $5 trillion. It's just mathematics. If things work, we'll go there in the next few years. It shows that we go up and down, but roughly that 6 to 7% trajectory is on the up move, reason for optimism. In terms of the gross domestic product per capita, we're at about $2,200 today per person. If all this works out, we'll be at about $4,000 per person in the next few years. Still way below internationally, averages, but definitely on the upswing. The 10-year government bond yields. It goes up and down, but essentially in the range of 5.5 to 7.5 for the last many years, showing a slight downward tick now. Let's hope it continues. Obviously, it has gone up for various reasons of inflation, etc. But so that's the government yield. The current account deficit is pretty high at the moment. A question definitely we need to ponder about because of oil prices, food prices, and so on and so forth, but basically oil. But will taper off in the next few years is the expectation. So not too bad, not too good. So in a snapshot, this is what we generally see in the economy. It comes through the media, various people talk about it. So this is roughly where we are. A reason, good enough reason. I think these are reasonable. In the media, of course, we hear all this. Like I said, but it's the dominant private media, or talk which we get. Is that what I have a problem with? I personally have a problem with, which says things of this nature. Now, let's see. If all this is true, then let's start asking the questions. So this is what we have. Let's see how we distill it. And there can be many questions. I'll just put some of them here. And they are pretty wide-ranging to assess the inherent strength of the economy. That is the basic thing we are trying to assess here. So the questions would be, do we need a broader set of variables other than GDP, right? What are the income levels, employment levels, inflation, how it's behaving, levels of poverty and inequality, where are we on that? What are the health and education parameters of our human capital? Financial stability of banks, of the system in particular, but of banks. Most importantly, is the economy transitioning in a phased and planned manner from being a largely agricultural economy to a manufacturing and then to services? Is that transition happening properly? Because that has huge implications. How are we doing on corruption, cronyism, the entire market structure of India, the market structure in terms of competition? What is the Competition Commission up to? Those sort of things. There are many more questions, but these are some which will give us an indication. And like I said, if we go into each one of them, it will take at least 2 days, if not more. So in the limited time, I will give you a flavor of maybe 2 of them so that it can get us thinking. This whole thing is about GDP, right? The whole thing is about GDP. GDP growth has been very good, 7.8%, etc. Now, there are a few questions here. The unorganized sector in India, which is 94% of the overall economy of the country, 94%. Formal is 6. That is not captured at actuals in the GDP number. It is not at actuals. It's a proxy, a statistical proxy on the growth of the organized sector. So if the organized sector is doing well, 6%, it is assumed by a statistical formula that 94% of the economy is also doing well, right? And this is a statistical number over the past many years, many decades, that has been the number. No problem with that. The problem is, post-demonetization, the unorganized sector has been demolished. MSMEs in particular, we know that. And we are formalizing the economy as well. So this shrinkage in the unorganized sector is being actually shown as a growth number because of the organized sector is actually doing very well. This is a definition very few people will talk about. This is a definitional error or need to change it. The second issue is, as you know, in GDP, when we say GDP, what does it mean essentially at a high level? I am spending something and you are buying it. Or rather, I am making something and you are buying it. So SAP makes something, you buy it. So one is a buyer, one is a seller. So that's the factor. The factor cost is the income side. So SAP's income will show I sold 100 rupees worth of stuff. And somebody's balance sheet will show that I spent 100 rupees. So a GDP, when it's taken, is taken from both angles. So one is what's called the factor side, where we are at 7.8%. And one is at the expenditure side, where, strangely, it shows only 1.8%. Now, there's always a gap. There is a statistical gap, and that is explained. We have had no explanations in the last 2 years, none whatsoever, of why this gap is so large. But these are Government of India figures. 7.8. We have chosen to go by 7.8. Many countries, UK, Australia, Switzerland, many countries, they take an average in between. So just to get a flavor right, I went to the US Bureau of Economic Administration figures to see what, if I apply their method, how much does our thing come to? It comes to around 4.5%. So the gap between 4.5 and 7.8 is also large. So the point is, celebrate the economy, but know what the GDP number actually means. The third way of looking at it is the lived reality of basically employment and poverty. Manrega, a scheme we all know about, we all contribute to as taxpayers. Manrega, as you know, was made to guarantee employment, to alleviate extreme poverty. So it is not employment which you and I will be able to do. It's extremely hard employment at subsistence wages. So the wages are given are minimum wages. And you have to work hard in the sun and do manual work, which is damn tough. So people don't go for Manrega necessarily. You only go as a last resort. That is the basic thing about Manrega. This quarter, in which we showed our highest growth, the Manrega employment, again as per government data, went up to 80 million people. 80 million people, the highest ever. And just to give you a perspective, all the companies in the stock exchanges listed on NSE, all employ 8 million people. So this is the perspective. 80 million people went for Manrega this quarter. So something is wrong somewhere. So we need to beware of that. In 2019, this is the famous thing which got flashed all over the media as well. So the railways advertised for 35,000 jobs. There were 12.5 million applicants. And finally, even the 35,000 jobs got cancelled. And there were railway strikes, there were all sorts of things which happened at that time. So there's a lived reality aspect of GDP growth and prosperity which which we need to imbibe and understand when we say the health of the economy. Whose country are we talking about? My world, your world, there are all these sort of issues. So we need to understand that. So the obsession with GDP, to my mind, on poverty, the question on poverty and inequality is why continue with free rations for the last 4 years, or for the last 4 years. We're spending a huge amount of money on that. Why continue? Everything is so fine. 6,000 to farmers for the last 5 years. Per capita GDP of India is still 138 in the world. I said the number will go up substantially, but even now, it's 138 globally, which is 5 times that of China. China is 5 times and Korea is 20x. Both countries, remember, were poorer than us when we started the journey in 1948. Poorer than us. And this is where there we are at the moment. So fundamentally, there are some economists, very few, who have started talking about measuring the median GDP as the measure for prosperity. It would make sense to people like you and me because the median will show where really we are prosperous or not. We don't measure it today. But very few, handful of economists have started talking about it. Robert Solow, who got the Nobel for economic growth, He coined the word GDP, by the way. He said headline GDP is not a holistic indicator of health of economy. This is there in his books. We have read all that the time we were reading economics. He said headline GDP is not the measure of growth, measure of prosperity. Our own RBI data today, shows that the relationship of GDP with jobs has declined over the last 3 decades, right? 1% used to generate 2 lakh jobs. Last decade it was 1 lakh jobs. Current decade it's 50,000 jobs. So we are having jobless growth. And that would make sense intuitively, basically the advent of technology and productivity. It would make sense. But then how do we solve the problem of jobs is, I think, is the largest problem which we have. So then someone asked me this, so why are foreign institutions going over the moon in the G20, for example? Everybody clapping, everybody's back, India's largest, absolutely. IMF, foreign brokerages, MNCs, head of states, just name it. The markets are buoyant. And yet, let me tell you, the foreign institutional ownership today, as of last week, is at a decadal low. Decadal low. It has been made up by domestic investors, which is a good sign. But foreign institution investors, mind you, are far more astute. They have had experience in emerging markets for decades. Our markets are new. It's young people putting in money through SIPs, confidence in the economy, perfect, no problem. But imagine where the markets would have been if the institutional ownership of FIIs, which is at a 16-year low today, was actually at average, even at average. So there is something they know which we don't know. But do we talk about it? I have not heard anything at all from anywhere. So why do everyone does this? The answer is quite obvious. Because it's in them, it makes sense to them, right? To sell their goods. From the Rafale jets to selling Kellogg's, everything will work. So as far as the selling part is concerned, MNCs, head of states, we are driving the French economy for sure, with the Airbus orders and the Rafale orders and all of that. The largest orders have come from India. 1,000 planes between Indigo and the Tatas, for example. So they will clap, yes. But our leaders meaning people like you and I, need to stop and think, what is good for our country? Is it justified? Not get carried away. That is the point I'm making. For a capital-starved nation, this is good. Of course, we need foreign capital. But something beyond that is necessary in the national dialogue, in the national discourse. Just as an indication, there's something called a $1.9 poverty line, which is, it's loosely termed as the subhuman level of poverty of persons who earn that per year. It's a worldwide index. There was a report which was published in 2018, which was hastily withdrawn. That showed that we are at 23% in this line. It was withdrawn. So 23% was, in 2012, which report is available. 2018 report was withdrawn. And why was it withdrawn? Nobody seemed to know, but essentially it was said that it's wrong because it just can't be right. It's wrong because it just can't be right. GDP has been growing, so how is this possible? And it was never replaced. The $3 poverty line, which is, we were 65% of our population, which is much better than 1.9, but we're still there. So the point is that this rising disparity is something which has to be tackled, not in my purview, but is an issue before we declare that we have won the economic war. Jobs, like I said, is 10%, as per CMI data, is 10%. This quarter, this month, the highest for a very long time. It's always consistently been in that area, so there's nothing much to speak about. But there are spin doctors, by the way, who are at work. Some economists of one of the largest banks, said that the government data, which is instead of 10, is actually 3.2%, apparently. Because And why is that number 3.2%? Oh, because you need to, and this is in a published report, that you need to include roadside vendors, gig workers, unpaid household workers, which is spouses, I guess, those husbands who don't work or those wives who don't work but manage the home. Unpaid household workers, they need to be considered in the GDP number. You know, there are no debates anymore in the media. I've stopped going for most of the TV debates because it's of no use. These are coming out in regular reports, like I said, of India's largest bank. One guy says the labor force, after 30, you should join the labor force, you should consider only after they age 30 years. Today, when you do unemployment, you're taken for 15 years onwards, because India is a poor country, people start working from 15. But no, till 30 they are studying. So take that out from the denominator. Obviously, you'll get 3.2%. They are saying this in reports. The net issue is, I mean, you can say whatever you want, but the net issue is that there have been no jobs created in the last decade. And we need it, and we need 200 million jobs in the next 10 years, to reach that level which I talked about. And the core problem is obviously jobless GDP growth. One more data point, the labor participation in India today has dropped to 40%. And China, Bangladesh the numbers are there, 68, 57%. This is a ticking time bomb. Make no mistake about it. Now, if we have to find a solution to this, obviously some understanding of history is required, so I'll just touch on a few historical slides. So this basically shows the three employing sectors: agriculture, industry, and services. And like any poor country, from agriculture, we move to manufacturing and then go to services. That is the general path the countries have taken. So our agriculture has come down, as you can see, from 49 to 43%, even higher earlier. Services has gone up, but they've gone into low value-added services, which is fine, like BPOs and very, very low value-added services, courier services and all of that. And that's why people have become, but we have skipped that manufacturing thing is sort of constant. It's sort of constant. And why is that important? Because most economists seem to agree on this, that we lost out on this jobs thing because we lost the manufacturing race. So when we started in 48, all these countries, India was far higher. It was at roughly 2.5% of the world's manufactured exports were from India when we started in 1948. I mean, Bangladesh, Vietnam, Taiwan, they were nowhere there. Korea, China, nothing was there. And then you can see where people have gone, where countries have gone. And India has remained at that 3% range, 2.5 to 3%. So we lost that race, of international competitiveness effectively. Because the post-war engine was based on exports of cheap labor, of labor-intensive products, not cheap labor, labor-intensive products. And also it was directly proportional to the female education, which, as I'll show later, is something which you have a problem. And the third reason, am I audible? Yeah. And the third reason is that our sectoral growth, the massive growth which has come, that has come essentially in construction and real estate and finance. These three areas. It has not come in other areas, so these areas, apart from construction, do not employ too many people. So this is for economists and our business, our country's leaders to think, is the path we are taking, is it sustainable or not? The path we are taking for economic growth sustainable or not? And this is after 75 years, mind you. It is not today's problem. It's been happening for the last 75 years. Are we correcting it? Let's see. So it's the same thing. Essentially, I think as of now, female literacy is not an issue. All countries are similar. But this is enrollment data. Outcomes is the problem. So that goes to the topic of education, which I'll talk about later. So as you can see, people in Vietnam, for example, which is a benchmark case, they are better in science, maths, and reading than even developed economies like Korea and France. Our outcomes, of course, are known. It's quite poor. Uh, the, the, the education we provide, not people like you and me, but the general education which is prepared. Even class, they do not know what English reading is or interpretation of division and stuff like that. And therefore, the female participation rate you see in India has dipped sharply. It's about 80% now, it's sharply. Not a good sign for manufacturing and those sort of exports. Okay. This is the same thing I told you about. So our growth has essentially come from finance and real estate. Manufacturing has been steady. Construction has gone up. This creates its own problems. Do we need a new development model? I think that's the basic question which our economic leaders need to talk about, ask about. I don't see that in the public domain ever, but hopefully some work is going in that direction. Or let's follow the time-tested model, which is high domestic savings, augmented by foreign capital. You accumulate capital, you pay large, low labor with basic education, so the education levels go up, and then export it out. This is the time-tested model of all these countries. And but then you migrate from agricultural labor to urban manufacturing. You don't go directly to services. Service is a different game altogether. We have gone there, which is fine, but this transition is the time-tested model. So, but to do that, we have enough issues, which I think as CFOs, most of us know. Insufficient allocation of capital, you have issues of very ambivalent attitudes towards protectionism and contempt. So tariffs keep going up and down, regressive taxation, which we always face, complex compliances, labor laws, we can just go on and on. So these need to get corrected. Unless these are corrected, the first one will not happen. So the new PLI policy, I think I'll just touch upon it a bit, but lots is spoken about it. The PLI policy, I think, is a step, therefore, perhaps in the right direction. But, again, there's a but, unfortunately. We are doing the PLI at the low value-added end. So you'll see all sorts of media reports, all sorts, which will say that because of PLI success in mobile phones, which is the oldest, our exports have gone up by X 30,000 crores plus. True, they have. But does anybody talk about how much imports has gone up too? The imports is 90%, it's 27,000 crores. And we're getting all from China. The country which if you see the trade balance with China, that has actually gone up despite the restrictions, despite our foreign policy of, being at a distance with China and so on and so forth. It's actually gone up, the trade imbalance. So we import 27,000 crores, we export 90,000 crores, 30,000 crores. So we are doing the low-end sub-assemblies. That's what we're doing, which is a great place to start maybe, but not to celebrate. So intelligent allocation of capital is important. Because all this is coming from your and my money. The subsidy being provided is coming from our money, right? So chip manufacturing, that's the next big thing. We're going to allocate $10 billion for it out of taxpayers' money. There's a glut of chips in the world. There's a glut of chips. And there is no way we can reach chip manufacturing. It's an extremely complex activity. We can't reach US standards or standards, not in the next 25 years. But we're investing in it. So therefore, someone needs to think that, can't we do something which is aligned to our skills? Do PLI, but do align to our skills. Like cloud, telemedicine, manufacturing services and design, 5G, software in 5G, those sort of things. They are very high value added, by the way. In Apple cell phone, about 40% goes in that segment. I've given the Apple example here because it was readily available. In the Apple cell phones, 40% is design services around that. So, and we have a comparative advantage there with respect to people like China, etc. Law, language, education, trust, all of that stuff. So is it good for us to look at that too? So net point is that, while celebration is good, new era China type of macroeconomic performance which it showed from 1980 to 2015, or 2015, thereabouts, that is not there here. Take it from me, it is not there yet. And I'm willing to debate this with anyone who's willing to sit across coffee. I put up this slide specifically because our success sectors, and most of us belong to this, is IT and pharma, at least in Bangalore. I am a product of the IT sector. Our growth has been because of the IT sector and pharma. These are the two places where we had maximum advantage in terms of comparative advantage. But the world is catching up. You can see the figures. Figures will speak for themselves. See where China was 10 years ago and see where we are. And they've taken this up despite not knowing English, despite having trust issues. Their colleges today, the education system, they revamped it in the mid-90s, are producing enough and more engineers. So their share in world exports, just see how it's growing up. So our comparative advantage sort of is at some degree of challenge, let's say. It's not that it's all hunky-dory, going to be hunky-dory in IT and pharma as well, which is we are the leaders. One quick one on market structure. I talked about competition commission of our institutions. So it's an observation. I don't have good data on this to give an opinion, whether it's planned or is it by chance. Does not seem to be by chance because we are rapidly transforming to less competition, despite having a competition commission, which we have heard nothing about for the last X number of years. I very closely follow these things. So when PVR took over Inox and basically became a monopoly, I had not expected the Competition Commission to give it a go-through, but it did. And we are seeing this all across, from Airtel Jio to Indigo Tatas, Adani's, Flipkart, all of them. There are many, many more I can add here. So India is transforming to a duopoly, monopoly sort of, it seems it's transforming. What it does to us is quite obvious in terms of prices. Not a good thing for us as consumers, but this seems to be the trend. There are many more questions. I'll just stop here, but there are many more questions. For example, I talked about savings being the route to growth, economic growth. Our savings are the lowest in 50 years today. Lowest as a country. It used to be, it is 5% of GDP against 8% pre-COVID and 25% even just 12 years ago. So the entire growth is being funded by household consumption, which is debt. So households are taking debt or breaking their savings, and government investment. These are the two things which are driving us. Look at your own households. How long can you keep on borrowing? The country is doing this. This is what it shows. Neither is sustainable. Our investments, therefore, are down from 36% in the mid-2000s, which was a golden period, to 28-30% now. The investment. And that's because private companies, where you and I belong to, are not investing. Still not investing. So if everybody is so confident, why are they not investing? Okay. Similarly, the central government debt has gone from 30% to 84%. Still better than many countries in the world. Agreed. But do we follow their bad things or do we follow their good things? What do we do? But our debts have gone up. It's about 84%. So all this GDP thing which you see needs to be put in this context. There are many more. This tax is a good thing for CFOs to know. The tax per GDP, if corruption has indeed come down over the last 15 years, why is the tax to GDP ratio still at 17%? It's constant. I don't have an answer to that. If corruption has indeed come down, why? And there has been growth despite that. A quick slide on the other big issue which is necessary for the economy to do well, which is governance. I mean, this, I think most of us know, but it's good to see it in figures. You can see the campaign expenses for elections to the Indian Parliament. have steadily gone up and overtaken that of the US in the last so many years, the campaign expenses. And as you know, campaign expenses in India are confidential. By law now, we say anyone can contribute anything, so. And the share of elected members in parliament with pending criminal cases, just look at the slide, 2004. This is elected members of parliament with pending criminal cases. So if the governance is going in this direction, is it any surprise that these sort of decisions which we need to take are sort of not so important? As long as we govern today, it's good enough. These are facts. That was India. Now, India survives in a global environment. And I have personally never seen the global environment in such a bad state as it is today. I would urge you to read this book from Mega Threats by Nouriel Roubini. These are from there. I follow him for many years. We know most of them, I think, but it's good to see them. Basically, GDP of all Western countries from 100% to 430% of GDP, unsustainable. They survive due to low interest rates. Now interest rates are going up, bubbles are bursting, recession or low growth. I mean, no one knows what's going to happen on that front. Basically, loose fiscal policy, loose monetary policy, supply shocks, essentially stagflationary trends. That is where the world market is. And those in IT and pharma know this very well because we see that on every day. It's only our foreign exchange which is saving us, the decline in the foreign exchange. In terms of real volume, the growth is negligible, even for the IT sector. So on the supply side, the costs are going up because of deglobalization. You are aware of that. Migration controls, aging population, in the Western world. Geopolitics, climate change, cyber warfare, weaponizing currencies, all sorts of things. This is all going on. Anyone who reads will know this. On the demand side, there's a cap. US is already at about 5%. It's come down last week to about 4.6. But there's a cap on interest rates. The Fed cannot increase interest rates beyond this. Otherwise, the markets will just crash. It'll crash equity, bond, and credit markets and spark inflation. So it'll not work. They cannot raise taxes. Neither they can raise spending. Neither they can cut spending. I was talking about this to one of our colleagues yesterday from Europe last night. I mean, this is a reality. Hence, higher inflation, in my view, also you can call it inflation tax, is necessary and will remain. It will remain a high inflation world. 2% US inflation will not work. Because through inflation, you can reduce the government debt over time. The next generation pays for our mistakes today. That will be the most logical way forward. So you will see higher inflation in the Western world, continuing as a method of reducing the domestic debt, but basically passing on our problems to the next generation. That is what will happen. On top of that, there's permanent displacement of jobs, AI, robotics, etc. Many of us here will find difficulty in retaining jobs which are mechanical in nature. And finance function is generally the first to be hit. So there's a large public debt. Future cost increases because of the reasons I mentioned, plus the demand side is constrained. This is the world situation today. The currency of Japan, I don't know if you follow, many of you might be following, has crossed 180 to 180 yen, 150 yen. The impact this will have on emerging market flows, because Japan for the last 20 years has been the exporter of capital. Now with the currency going to 150, EM flows and carry trade, it's called carry trade, let's see where it goes. So the world situation is not good. I tell this to one of my friends who I advise on a regular basis. The world situation is not good. We have to work within that. So we have to understand that the world situation is not good. Now, is any of this in the public domain in terms of discussions with intellectuals on behalf of the economic leaders of our country? I don't hear it at all. At all. Because doing the right thing, everyone knows what to do. We just cut spending and reduce debt. Everyone knows that. The question is, the politicians will never do the right thing. Globally, and India also, will not do the right thing. Because for the simple classical economics, free rider theory, what I have to do today will give results after 20 years, when I won't be there. This is what's happening, kicking the can down the road. Sustainable advantage, this is what every politician is doing. The only person who stood against it, again, I was telling him yesterday, was Angela Merkel in Europe, in Germany. Unfortunately, she's no longer there. She saved the European Union from virtual collapse by rescuing Greece, Spain, Portugal, all those countries, the PIGS countries, a few years ago. She did the right thing, but Germany took the hit. How long will one country do this? So essentially, the people are not, someone has to wake up. That leadership is not there globally. And the world, frankly, is much more complex than our time. By our time, I mean when we were growing up, 70s, 80s. You know, there was a detenue. There was Russia and China, Russia and the US. But everybody knew there won't be any war. Today, we can't say the same thing. There was no pandemic. There was no climate change. There was no AI taking away jobs and doing our thinking for us. There was some trade wars, but WTO was there to regulate that. There was hardly any protectionism because it was a free globalized trade. There were no debts. The global standard which got depegged, which led to the US boom, that was an event. There was benign inflation, no terrorism. Think about the world when we were all growing up. Not you, I mean, I'm saying when we were growing up. Today, it is actually more like 1918, post-World War I. End of globalization. That was end of globalization number one. Inflation, high inflation. Spanish flu. Recession, fears. The markets were overheated all over. Markets didn't seem to fall till it fell. Trade wars, currency wars, rise of fascism in Spain and Italy, other things. And finally, the World War II. Today's world is very similar to that. I hope history won't repeat itself, but then those who don't learn from history are doomed to relive it. So we'll see what happens. What's good in India? There is lots good in India, but it's all in one domain, in my view, in one domain. And that domain is technology. Nandan Nilekani, in 2003, gave me a book for my daughters, who were very young at that time. Said, get them to read this. It was a book he had authored called Imagining India. So my daughters were young, but I said, yeah, as they grow up, they will read. Thankfully, both of them are in the technology world, insulated from some of this at the moment. He had written this book. It went over my head, but it sounded like a pipe dream. But the intent of the man is such, and the country acknowledges it now, that when he left Infosys, he devoted his entire time, and of course, the government took him on because of his thing. And that is one area, the technology area, and Bangalore is where it all happens, is something which is unparalleled, which is going on, unparalleled. Then financialization of savings. SIPs have gone up. It's almost about $2 billion a month. Young people are putting money into the SIPs. Demat accounts are getting opened. Financial savings, very good, of course. Formalization of the economy is good, provided the unorganized sector is taken care of. But the formalization part is good. Of course it's good. That is happening today. We have had the highest FDI in the last 2 years. 60% of our entire FDI for the last 75 years has come in the last 2 years, which is a great sign. Forex reserves are up. It's good for the moment, but then, of course,
They are hot flows as well. So we'll see, but FDIs are good. So the good thing about the foreign FDIs are 93% came from the open route, which means no approvals were required. And it came from 162 countries. So which means it's very broad-based. Very good. These are good signs. There's no question. There's a premiumization which you see about on flats, cars. So the expensive ones are selling fast. In Gurgaon, a flat sells for 50 crores. It just sells. In Bombay, one of my colleagues bought something for 85 crores. I mean, the numbers you can't even think of. The drop of a hat, he just buys it. Somebody sells the Flipkart order. The Bansal sold, a young boy, he sold it for whatever, 50 crores in Bangalore. So premiumization is taking place, which is again good for our part of India. It is good. But then, remember that, these are good things which are happening. The data per capita, this is the most interesting one. The data per capita, we are number one globally today of the data consumption which we do on our cell phones. This shows a massive adoption right across the country, from the poorer people in the villages to us. We were 123 8 years ago. Today we are number one globally. All because of the digitization. So that part something we are extremely bullish about. So the whole digital society I talked about, which we all know, the Jandar, Aadhaar, KYC, banks, mobile, DBT, NPCI, and now ONDC. ONDC will essentially completely break down e-commerce as we know it. And it's an amazing initiative. So the reason for this is, as Ranjan says in that book, and he had explained this personally to me at that time, it flew over my head, but effectively at that time he had conceived of the architecture, and it's there in that book, please read it, that our strength, India's strength, despite all its problems, is essentially human capital. So the entire architecture of all this is stitched around human capital, putting the poor Indian citizen at the middle of it. So if you see what ONDC is doing, just a quick example, what ONDC is doing. Amazon and Flipkart are there, right? But if there's a poor fellow, who, let's say a lady who likes to cook, for example, or something, anyone can become a supplier with ONDC coming in a couple of years. And anybody can be a buyer. And anyone can do the logistics. Anyone can do the financing. All that happens together without a platform dictating terms. So this unbundling of e-commerce is something which is a very big movement, which is now happening. Of course, we all know UPI, etc. So the transformative impact of this architecture was localized solutions with interoperability through networks. Every solution needs to talk to everyone else, which it is doing. It's an amazing feat. And small solutions, you and I can make a solution which will talk to somebody else and I start selling a product. This is what his architecture had think of. So thoughtful leaders like that, I don't know how many are there in the country today. That's the problem. But technology is in good hands. He has taken a very good band of leaders to take the work forward and all of that. So that's something we should be really, really happy about. So he talks about this collaborative ecosystem being built, which is Samar, Sarkar, and Bazaar. Unless these three work together, it will not work, and it's happening in these areas. Okay. What is happening on this front now? Some of you would have heard about AICS. So our biggest bugbears, as we showed you earlier, was education and healthcare. These are the two biggest bugbears for us. Unless we do that at quality, live, and scale, none of this will happen. So education, people have done setting up universities. Some are good quality, most are bad quality, all that is happening. But his initiative is this 8-step foundation. So read about it. It's basically setting up a platform with the government, which is called the Diksha platform. So they're making a world's largest online platform where education can be available to anybody at the same outcome levels. Healthcare, telemedicine, shortage of doctors. This is Bhashini project, which essentially talks about generative AI for learning outcomes without any language barriers. We have so many languages, so there's a translator there and all of that. So the new model of equitable growth, which is being pushed by the technology side, is social inclusion through Aadhaar, financial inclusion through banks, distribution through NDC, and economic inclusion through personalized credit data. So if the data belongs to me, I can sell it and get higher credit. So this is the new model of equitable growth, which is coming from this side. So it's something which has never been tested anywhere in the world. So the perspective, I'll just take, I know I've crossed the time, I had warned him. Anyway, so on the perspective side, if you put all this in a cauldron, where are we? Where are we? Is it good, bad, ugly? Where? I don't know. So I think my perspective is what I've written down here, is that we live in an age of three things: hype, leverage, and aspiration. Fake news, cheerleaders, media journalists, who have become ventriloquists or stenographers, beware of them. So beware of what you hear always. Think on it, apply your own mind. Compromise media, as I mentioned. Decision makers, perspective is critical for survival. You will see it in your day-to-day job, and therefore the quality of decision making. So basically CEOs and CFOs. They're the two principal decision makers in any company. The world is in a bad place. Keep that at the back of the mind. India much better placed in the short term, much better, but structural remedies are still necessary to achieve Amrit Kal. Seems difficult at the current trajectory to me, but there's a technology side which is so good that maybe it'll take it over. And we tend to see only our India. We don't see the rest of India. That is not true. Land of paradoxes, of course, all that we know. We have weathered the economic, I must say, we have weathered the economic hurricane of the last 4 years pretty well. Pretty well. But we still remain vulnerable to some extent. I'm talking about the immediate time. But the reset of economic discourse is necessary in the country. Our resilience are obviously showing a lot of economic confidence, etc. But sustainability of that, and this, ladies and gentlemen, is, I talk, wherever I give talks or interviews or write, is my hope for the younger generation to pick this up. It is the sustainability of this which is important in a country like ours. And there the moral fabric is the foundation of both democracy and a vibrant economic activity. Without that, it is not going to happen. So don't be a cheerleader as much as you can, and trust, accountability, enforcement, justice. If these things all work together, others will follow. So there is hope. The digital society is the hope. And I end with a quote from another very famous economist, Joan Robinson. She said, whatever you can say rightly about India, the opposite is also true. 1984. And the other one is, the purpose of studying economics is not to acquire a set of ready-made tools to answer questions, but to learn how to avoid being deceived by economists. So whether I've been able to deceive you or not, I do not know. But I hope I've left you behind with a perspective to think about. Thank you, ladies and gentlemen.